morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday. It's July 27th. We got a few economic news releases to go over today, so we'll kind of delve right into it. We'll start off with the weekly jobless claims. We had 234,000 people apply for unemployment last week. Forecast for this week's is 245,000. It came in at expectation at 244,000. Still kind of showing some strong jobs growth here. So we're still seeing a lot of jobs up. Matter of fact, next Friday will be the big day. We'll get the July jobs numbers coming in. So next week will be kind of a week packed full of important data. So that will probably be the big one for next week. Just a heads up there. Also, we got durable goods orders for the month of June. So in May, we had a pullback. It contracted, dropped 0.1%. Forecast for June was supposed to be 5.3%, and it went up 6.5%. Now, if you strip out the big ticket items like your airplanes and autos, we have what they call durable goods, well, excluding transportation. We had back in May, which was a good month, 0.6%, and then June forecast was at 0.4%, and it was actually only came in at 0.2%. So what does that mean? Basically, the big ticket items skewed the numbers, which is why we had a huge number at 6.5 versus 0.2%. We had basically Boeing came in with a pretty big order, and that's what kind of drove the markets or drove those numbers up much higher on the durable goods orders. Now tomorrow we do got the GDP coming in. Atlanta Fed had forecasted Q2 to be right around 2.5%. Some economists are projecting even a little bit higher, like at 2.8. They did lower their expectations at one point. It was at 2.7, I believe, and they dropped it down to 2.5. So it'll be interesting to see what the initial one. We'll have three revisions of this. So the initial one will be tomorrow report, the first one for the second quarter, and then August we'll get the second, and of course the final come in September for the Q2 numbers. And it'll be kind of interesting to see how that comes about. See if we are at least in the mid-2 range or higher or lower. That will probably help us with the next Fed meeting coming in as to where the economy is moving. Of course, I think first quarter was a little bit more disappointing. Came in, I believe, if I recall, about 1.4%. So obviously a little disappointing there. Let's kind of jump into the headline news here. We got right now stock market's mixed. All of it was actually up, and they were at record highs this morning. They're all up. Since then, since this morning, kind of about the midday in New York, it's come to Dow is the only one actually that's up right now. Probably what's going on right now is a lot of these people are buying in and then kind of selling off and taking profit sharing. So that's probably what you're more or less seeing. We had some really good earnings reports that came out, which has been nice. And also on top of it, we had the Fed yesterday with their announcement, which came in pretty dovish. So as a result, yesterday, stock market took off a bit more. Bond market rebounded because they were down for the day and rebounded, and kind of had a nice little impact on the day, which came in about 25 basis points higher, which kind of helped us alleviate the loss that we had earlier, which was around 30 basis points from the day before. So let's kind of take a look here at the bond market. Here's what we talked about. We had, remember on Tuesday, we had a pretty big drop here, about 30 basis points, and which brought us down below the 200-day moving average. We started below that when it came out a bit dovish, we took off above it. So we're above the 200-day moving average. Now today we're kind of going to swaying back and forth here. Here's a 200-day moving average. We're just above the 200-day moving average. If we can keep above that, that could help us, keep in within the range and maybe get more of a boost. Now, if we fall below this, we can potentially have a bit of a sell-off. Our next level of resistance would be here at the 100-day moving average. And then the next one will be further down, around the 102.34 mark, as you can see where the last landing was here. This will be a bit stronger floor of support, but again, we want to try to keep above this 200-day moving average. So let's see today if we can remain above it. Just if you guys want to follow me at Twitter, I'll give you guys updates as to where we are, where we end up at the end of the day here on that. All right, folks. So that pretty much concludes it. Rates are about the same, or actually it dropped a little bit. I'm sorry. Currently we're down about 6 basis points from when we left off yesterday. So basically what that translates, it could be a little bit mixed. So depending on when investors, or we had the price gains yesterday and such, we could have slightly better pricing, or a little bit worse pricing than what we had yesterday. So most lenders did a price for the better when the market improved. Since we're down a little bit, some may pull back a little bit on their pricing, because obviously with these huge fluctuations, we were way down here and we're way up here. Some lenders might be kind of somewhere in between there. So I would say more of a mixed today with rates today. Sorry about kind of the vague difference there, but with these big swings here, and when lenders come out with the pricing, each lender might be slightly different in their net result. And of course, they could adjust it throughout the day here as well. So that pretty much concludes it. But if you guys, again, just come over to Twitter, you'll get more updates there underneath Mike Bjork on Twitter. And if you guys are on the market for a mortgage, whether if it's a purchase or a refinance, feel free to just contact me. Email is the best way to reach me. All right, you guys have a wonderful day. Thanks so much for watching. I look forward to see you guys tomorrow. Take care. Bye bye.